not seen in 40 years. I told you this would change silver price. I love to say I told you so. I love it. And in this video, one of the top dogs in the industry gets to say it loud and clear. I told you so. Silver is reversing course. I'm going to break this down for you to make it simple, and you will be ahead of the game after learning this. You will know exactly what is coming down the pike for silver. Stay informed and check this out. This is from an article on marketindex.com. The heading says, "This important market indicator just hit a 40-year high. Here's why it matters." The article starts by saying, while inflation remains above target in most major economies, investors have been turning to other hedges beyond bonds and cash. Some use alternatives like private equity, while others use investments in raw commodities like silver, gold, and oil futures. The metric at 40-year highs, check this out. It says, a key market metric, which is a correlation between the S&P 500 and the Bloomberg Commodity Index, has reached levels not seen for over 40 years. Put simply, this is according to this article, this suggests that a greater than zero correlation implies that stocks and commodities are moving very closely in tandem. This is exactly what we've been seeing the past 6 weeks. Now, if you go back even 5 weeks ago and you look at the strength of the dollar, you look at the strength of treasuries, you look at the strength of the S&P 500, and you look at the price of silver, silver stayed head to head with all of those. And it should not. It should not. Historically, silver should be dropping at that point. And that's why this article is seeing the same. Again, it says the metric at 40-year highs. Like this is unprecedented, really. We haven't seen this in 40 years. Silver is going neck to neck. Let's keep going. It says the stock story is, as every investor and their dog knows by now, is driven by returns in mega cap tech stocks. That's about the stock market. But the commodity story is being driven by governments, is being driven by central banks who are buying a lot of gold to hedge against ongoing geopolitical uncertainty. For most of the period until the GFC's breakout, commodity markets have moved inversely with stock markets. This is what I'm saying. That is, a commodity bull market would be occurring in tandem with a bear market in stocks. But that has slowly but surely changed. This is the change that we're seeing. And I've been talking about this for a while. I'm happy to see that this article comes out really showing that other people see this also. This article says, what does the breakout in this ratio mean? In short, two main outcomes are possible. Firstly, the positive correlation means that if there were to be a downturn in either market, both could move together. That's true, of course. If stocks start to go down, dollar goes down, treasury bonds, the yields go down, then silver could absolutely follow, right? This essentially cancels out the effect that commodities are meant to serve as a hedge in portfolios. Secondly, this article says, perhaps more importantly, the correlation may actually suggest that a looming super cycle for commodities is very real. Let me say that again. This may suggest that a looming super cycle for commodities is very real. This is something that we have not seen before. We are in new territory. Silver should not be behaving the way it does. Silver should be dropping. We should be breaking the floor. We should be going back down to the $24, at best the $25 level that we've been hovering at for the past 2 years. But it's not. And this is very strange. So let's keep going. It says the latest commodity bear supercycle started during the financial crisis and extended until 2020, when the rolling 20-year commodity stock correlation increased from negative 0.3 to 0.4. During that time, gold prices more than doubled and iron ore prices went from 65 a ton to 173 a ton. Wow. But as you may have guessed, not all commodities moved in a straight line. Now, gold and silver were really in tandem with each other, as one thing silver is doing that it should be doing, silver is following gold in its lag. What typically happens throughout the history of precious metals here is that gold will have a jump in price and everyone will be waiting with bated breath for silver to follow. And it does follow. It does. It takes sometimes a few weeks, sometimes a month or two, but silver follows gold. That's the lag that we hear people talking about. And this could absolutely be the same. So as gold and silver do this these unprecedented moves, staying along with the strength of the dollar, staying along with these high yields on treasuries, staying along with the strength of the stock market. We can absolutely see, as this article states, I love this phrase, a new super cycle. Wow. I mean, this is where silver has never been before. And if you're enjoying this content, this video, please hit like, please hit subscribe. It means a lot. It really helps. Gets this information out there to everybody. Now, I'm just a silver stacker. I'm not a financial advisor, but this tells me to continue my path. I'm all in on silver. I put aside my cash every week, every month, and I buy up what I can. Lately, I've just been going with silver rounds, and I'm just filling up tubes of silver rounds because this is still a great buy price. I mean, anything under $30, I can do. That's still absolutely good buy price, and premiums are really quite competitive lately. They're absolutely within reach. So I like this article's phrase, super cycle. That is exactly what I'm looking forward to.